After a red-hot start to the year, the SPAC market has slowed down in a big way, with just about $20 billion in deals announced since April. That compares to almost $100 billion in just the first 3 months of the year. And some high-profile names have taken a hit recently. Just take a look at the performance of stocks like Lucid Motors, Beachbody, Virgin Galactic in the last month. But while the market for SPACs might be slowing, there may still be a way to profit from the space. So, Karen, what is your trade?
So the trade is, and this is fast money, but this is slow, free money, and potentially you're getting paid to take a look at whatever deals some of these sponsors come up with. So the SPACs are worth $10. If you don't like the deal that they come up with, you can sort of put your stock back to the company and get the $10. So there's a number of SPACs with high quality sponsors, high profile sponsors, like Michael Klein of Churchill. So CVII is one, Gary Cohn and Cliff Robbins have another one, and Chamath has a number out there. So I've been buying them at a discount to 10, and the thought is I will sit on them. They have to find a deal by 2 years after the SPAC comes public. So Michael Klein has 18 months left on CVII, for example. Gary Cohn has only 1 year left on CRHC to come up with the deal. So I know that I'm going to get at least 10 back, so that's nice, but I get a look at whatever deal they come up with. And they're really incented to come up with a deal. They make a lot of money if they come up with a deal. So I don't know if the market will turn or not, but I know that I'll have a chance to look at whatever deal they get. It may trade up on the announcement of the deal, and I have until the actual merger closes to decide what to do. If they get a company and the market loves it and it trades up, I don't need to wait till the end. I can sell it higher. So I think you're getting paid an option to take a look at what they have. I think it's just forced selling. Too many levered holders of SPAC stocks. And so, I'll sit around and wait and get paid to do it.
Karen almost lost me at slow, but then she got me at fast when she said slow, free money, yes. BK. Too good to be true here? What's the catch in your view?
Well, I mean, listen, the catch is that they can go down more, right? There's nothing necessarily guaranteeing that you won't get a seller that will go out there. Ultimately, you're going to get your $10 back, so you might have to wait a bit and stomach some volatility. But to me, I think it's a great play. I would almost think of it, if you're thinking about your portfolio, put it in your fixed income bucket. Probably better to do this trade than it is to buy bonds at this point. So I'd much rather be here because I've got a bond-like return with some type of a call option on top of it. I like that asymmetric return.
Yeah. Dan, how about you?
Yeah, I think Karen used the expression forced selling. And so if it's forced selling and we're looking at these things down, 2-3%, you might want to wait until you get down 10%, because I just don't think the forced selling is going to end right here. And so we haven't had a meaningful sell-off in the stock market in probably 6 months or so. And if that were to happen, there's a lot more SPACs now than there were 6 months ago, and there's fewer and fewer targets that make a lot of sense, or you would have already seen deals being announced. So to me, I don't find 983 particularly compelling, when I think the risk could be down to maybe 9 if we had a broad market decline. But I do like the strategy. I think it makes sense. As usual, Karen's like the smartest one on the panel here.
I would agree with that.